Hello, my name is Shawn McKenna, and this is Shawn's Ready Room. Today we will be discussing asset management, key components of good asset management, and how to optimize your portfolio by using asset management processes. First of all, what is asset management? When we talk about asset management in affordable housing, we're speaking about something that it includes property level management, but it also includes other things above the property level, which would be partnership or fund level items that need to be managed, regulatory requirements and reporting, all of which need to be managed. One of the things that this slide shows a little bit about or talks about is all hands on deck. And this is a kind of a concept that over the years we at ProLink have come up with. And what it allows you, actually kind of describes, is the ability to marshal both human and financial resources towards issues that are in your portfolio after they've been identified. When you're performing good asset management, you identify certain properties that you need to be able to spend a little bit more time and money on in order to protect the value of the portfolio or enhance the value of the portfolio. So this next slide has to do with the difference between what is asset management and what is compliance. I know there's sometimes a little bit of confusion over that. So this is a great picture of a donkey with a stick and a carrot, and it's probably not hard to guess, but compliance is the stick. Compliance represents the tasks and reporting and requirements that you have on a property that you have to complete in order to maintain compliance with your funding sources and other regulatory entities. Asset management best practices have to do with creating the very best and highest value of the portfolio. So that's a different thing. That isn't just maintaining the minimums, that is looking to try to maximize your value with the assets in the portfolio. So when we think about asset management, one of the other kind of things that comes up is what part of the property life cycle does asset management cover? And really the fact is that asset management, if it's good best practices asset management, it would be involved in every aspect of the property life cycle, from the initial application intake and concept all the way through to construction and lease up, and then on to reporting and compliance and final disposition. Now the reason for this, and this is somewhat controversial because some organizations, they break out their new business development group away from asset management, and they're kind of two separate silos of management and information. But the fact is that the asset management component of this is going to be dealing with this property for the entire life cycle of the property. It could be 30, it could be 50 years. So asset management should have a say, or at least be able to have some input with the origination group to be able to help guide and manage the intake of the new assets as they come into the portfolio. Really, it's critical that the asset management have at least some voice with the origination group, and vice versa. There needs to be a two-way communication there. That's a theme that you'll probably hear a lot today when I'm talking about asset management, is communication between the different parties and the different constituents. So what are the major components of good asset management? We really pretty much break them down into three major components with an underlying base of governance and mission. The governance and mission is the reason why it is at the base, is because without that, we really can't optimize our portfolio, because we really don't know what we're optimizing it for. So it's important that your organization review its mission and its purpose, and that purpose around a portfolio is communicated to all the constituents, to the developer, to the property managers, to the housing authorities, to everybody involved in the transaction. The three other components to asset management are pretty simple. We gather information, we analyze that information, and then we perform actions on that information. So this is another kind of a depiction of our market, but I guess what I'm trying to show here is portfolio management from a HFA or a syndicator perspective is usually managing a lot of assets hundreds or even potentially thousands of properties. And for each one of those properties, they have a fair amount of information and a fair number of tasks that they need to perform. Whereas the developers and PHAs, they have fewer properties, but on each property, they have a lot more tasks that they have to perform associated with asset management functions. So for instance, at the HFA level, there might be a requirement to collect an annual audited financial statement. Well, getting that audit completed by the developer or the PHA may take 20 or 30 different tasks or a fair amount of work at that level, where at the state level, it's really just collecting the audit and then reviewing it. So I guess the big key here is that managing or performing asset management and portfolio management activities is something that everybody in the industry is a part of, depending upon your location, whether you're at the investor level or the syndicator level or at the developer or PHA level. You may be managing a lot of properties, or you may be managing a lot of tasks that become very complex. Either way, these portfolio management techniques will survive and work very well for you. Again, the information intake, the analysis, and the actions. So information, what information do we need to collect on a property? The basics would be physical and operational inspections. For the physical inspection, it would be the property themselves, its appearance, its deferred maintenance, if there are issues with deferred maintenance and so forth. And then on the operational level, we're talking about meeting with the management team, understanding the marketing processes that the properties are using and so forth. Current operating and historic operating results are another key piece of information that we collect. Many of the institutional investors collect that on a monthly basis, but you might, whether you're a developer or a state housing authority, you might be collecting or supplying that information, depending upon your role, on a monthly, a quarterly, or an annual basis. Audited financials, as I mentioned before, there's several steps in the audit process, including getting everybody to approve the auditor, including the syndicator and the housing authority, and then going through the steps with the auditor to make sure that you have a good audit. Of course, compliance and regulatory requirements, income limits, population composition, all of this information, adherence to partnership agreements and compliance with loan covenants, servicing information. These are all pieces of information that we want to collect regarding each property. So as we move from, we've collected our information, we move into analysis of that information. So there's a lot of ways that we analyze this data. Organizations have annual review forms, spreadsheets, fairly complex spreadsheets that take in the various forms of data that we are collecting and kind of consolidate it so that we can see the operations of the property over the last few years. We can see trending. We know the debt coverage ratios and the loan to values and things like that on the property. We can see issues with deferred maintenance or other problems. We have partnership and sponsor information. We can see things that, information about the guarantees and the support of the deal. All of these types of data points need to be consolidated and reviewed. When we go about doing that, then there's some of the tools that we use are audits, the reconciliations with the audited financials and the operational financials are important. And then overall financial performance, these are all kind of the financial analysis tools we use. We also have risk engines that the industry has put together. As a software company, we've built several different risk engines for our state and our private investors. We move on down to peer comparisons and spreadsheet models for risk analysis. There's forecasting models. Ultimately, every year we do an annual budget in a way that in itself is it's a forecasting tool to represent our best guess at what this next year is going to look like. So all of this analysis then goes on around these portfolios. In this slide, we show a little watch list of 4 properties for a development company where, there may not be a lot going on with those properties, but maybe they're a little low on their occupancy levels, or a little thin on their cash flows. And it just gives us a chance to put those into a special location and have our experts spend a little bit more time on those particular properties to kind of get them back into shape. Okay, we've collected our information on the properties now. We have analysis we performed on the portfolio. We know where our high performers or good performers are. We know about our watch list. Now it's time to start performing some actions. And what are the asset management actions that we perform? Well, some of the standard actions are going to be approving budgets for each year. So each year comes along and we need to review a proposed budget, and based upon past performance and the needs of the property, we need to approve the budgets going forward. This area is kind of a key area, because as you're doing that and you're managing your portfolio, this is where we do some of that all hands on deck stuff, where we might allocate a little bit more money to one of our problem assets that needs a little bit more capital improvements in order to try to get its occupancy up a little bit, where maybe there might be another property in the portfolio that already has a strong occupancy, it's in great shape, maybe we don't put as much into capital improvements into that property that particular year. I'm not saying that those are always the decisions you make, but those are the kinds of decisions you make in this process. So we also set our performance goals. We deal with any notices of non-compliance, and we mitigate those to the best of our ability, and work with the other parties that are involved in the transaction to do so. And then we also, in asset management, we deal with troubled assets or issues that are in our portfolio, probably issues coming out from that watch list that we looked at earlier. Here's an example of a individual property that has a number of different programs layered into it. We have the Colorado 4% LIHTC application, the Colorado 9% LIHTC. We have a home application, and we have a RAD conversion going on. What you have when you layer all of these processes in are a lot of different requirements that you have to meet for reporting and for compliance. And so you need to be able to organize those in a way so that you're tracking and you're not letting things slip through the cracks. I've spoken with developers that have 6 or 7 different funding sources, and from multiple parties. It could be from Veterans Administration, it could be for elderly, it could be a number of different programs that are on the property, and each one of those programs is going to have its own requirements around inspections and reporting and compliance that need to be met. So it's very helpful to have a system in place that helps manage that compliance calendar. Document collaboration is also a key. We need to know and be able to access the original documents that were used when the deal was put together. We need to know what are the controlling documents at any given time. And we need to be able to document amendments and changes as we go through the management of the property. You can see here in this screen we also have the different constituents that are involved in the transaction, and transparency between the members is a key to good asset management. We really want everyone from the fund and the information it gets to the developer and the ownership, and then down to the property management, the state housing authority. All of these different entities need to have certain access and clean access to controlling documents and information associated with the transaction. So compliance and asset management, this is an example of when we get to the asset management stage on one of these complex transactions. We do have a number of compliance and asset management activities to perform. There's going to be usually people that perform these activities, and then there'll be other people that approve the activity that was performed, and then there'll probably be reports that are made from there on up to the other entities involved in the transaction. So this just kind of gives you a good idea of the type of tasks that might be performed in asset management. So today we spoke about asset management, best practices, and how to optimize a portfolio using asset management processes. The main things that I want you to come away from this with are governance and mission. We need to actually have some type of a mission or a goal that we have for our portfolio. In order to optimize the portfolio, we need to have a goal for that portfolio. Information gathering and sharing are a key to good asset management. We need good information, it needs to be clear, and we need to have accountable reporting lines between the different parties involved in the transactions. Analysis is also a big key. We need to have the ability to take that information we're gathering and easily put that into risk models and also just complete reports out of that data that help us to identify opportunities and issues within the portfolio. And then we follow up with actions, which would be collaborations between the different stakeholders and organizing the activities of the actions for the asset management of the property so that we don't let anything slip through the cracks, because there can be multiple sources of financing on these properties and regulatory authorities associated with the properties. We need to make sure that we keep everybody happy and that we are in compliance. So that's pretty much the asset management life cycle, all the way from I guess concept through to final disposition, and using asset management to optimize your portfolio. Thanks for tuning in today, and please contact me with questions or comments, and we'll be seeing you soon.